Here's a great question. How much down payment are people putting down right now? This person is looking to buy a place and wants to figure out how much down payment they should put down. So let's take this pretty home as an example, listed at $759K. But first, let's take a second to update the down payment rules in Canada. If you're buying less than 500 grand, you need to put at least 5% down. If the home price is between 500 to 1.5 million, we follow a tiered system, 5% on the first 500 grand, 10% on the remainder. And if the home you're buying is over $1.5 million, you must put 20% down and there is no insurance. So if your mortgage is if you're putting less than 20% down, your mortgage is an insured mortgage. With that in mind, that should help us with this breakdown. List price, minimum down payment is just over $50,000. Then we have to pay over $28,000 just in mortgage insurance. Quick heads up, that mortgage insurance covers the lender, not you as the borrower, but you have to pay it, and it is rolled into your mortgage. So the rate here you'll see is 3.9%, a great rate right now. But these are typically advertised. These are the ones that are advertised. They're insured rates. They cover the lender. So the lender is more inclined to give you a good rate. They're going to be capped at 25-year amortization. So you're going to have to borrow out of $759K. You're going to have to borrow $736 grand to get your monthly payment to just under $4 grand. And then that brings us to putting 20% down. Why would you put 20% down? Your down payment is going to cost you $150K, but you're not going to have to pay any mortgage insurance. And your rate is going to be a little bit higher because the lender is no longer insured, but you will have the option to extend this to 30 years if you want, and you'll only have to borrow 607 grand to get your monthly payment to just under $3 grand. So why would anyone go with a minimum down payment? Well, speed, right? You can get into the home earlier. You don't have to spend all that time saving for 20% down. And you're going to see better rates on insured mortgages. So if the rate really is the most important thing, maybe you want to go with an insured mortgage. And you're going to be capped at 25 years. So what that means is your long-term interest cost is going to be less, and you're going to pay this mortgage off faster. Compared to putting 20% down, you're not going to have to pay that mortgage insurance. And because you have the option to extend to a 30-year, you can get a lower monthly payment. In this case, it was about $1,000 less. And that's going to give you flexibility for your monthly cash flow so you can invest in wealth building tools like index funds or ETFs. So are you going to put 5% down or are you going to wait and put 20% down? Let me know. As always, if you have questions, shoot me a message.